Would you like to win and achieve success at what you do? Welcome to the Winner's Ways podcast, where we create winners every day. And now, your host, the author of Winner's Ways book and life coach, Bola Alabi.
Hey, what's up, everyone? Welcome to another episode of the Winner's Ways podcast. I'm your host, Bola Alabi. This is episode 147 of this podcast. And on today's show, I'm going to be talking about types of income. So as you guys know already, this podcast is all about career, money, and everything that you are going to need to live a good life. Now, it's been said that an average millionaire has about 5 to 7 income streams. The question that you may have is, who are these millionaires? What are the different sources of income that they have? You need not wonder anymore, because in today's episode, I will be going over 7 different income sources. Hopefully, you can start building more income sources for yourself if you currently have just one. I want you to challenge yourself and add just one more income source to your or existing income source. Now, to be financially free, we must all learn how to make money work for us. And to have a stable and steady income streams, you should find ways to earn money from more than one source. Let me not keep you waiting any further. Here are my 7 different income sources that you can use to build wealth. So the number one income source that I want to share is earned income. This is the most common types of income source. It is the money that you make from your job. That's if you are an employee. Now, around the world, there are literally millions of people that make their living by working as employee, whether it's in a big corporation, small businesses, or government agencies. It's all the same. You work and you get paid. There are lots of stigma on people that work for earned income. Most people believe this is the most challenging way to build wealth. Some even look down on people that earn their money, their income as employees. People often say that they trade their time for money. That may be true, but in my opinion, as long as you are working, doing what you enjoy, making money legally, you need nothing to be ashamed of. So you shouldn't have any shame. Many employees, maybe not many, some employees will end up becoming CEOs of their organization. So the higher you can climb on that career ladder, the easier it can potentially be for you to build wealth, and the more influence you can have in that organization. So earned income that you make as a result of working for someone or an organization, that's your earned income. So I have a recommendation. What's my recommendation on earned income? I want you to leverage your time and be efficient. If you have the skills and the experience, for example, to earn $100 per hour, there is no reason why you should settle for making $40 per hour. I want you to think big. I want you to aim high. You should be a problem solver wherever you find yourself and try as much as possible to grow in your career. Ask for promotion. Of course, you have to contribute to earn that promotion, but make sure you are growing. That's my message there. So the first one, earned income. Number two type of income is the rental income. You earn this income when you rent or lease a house, a car, or any other property that you own. When you rent it out to someone, what they pay you is rental income. Rental income is an excellent way of building wealth because through this means your money is working for you. If you own a property, for example, you get paid rental income. So the more rental property you can acquire, the more wealth you can potentially build. You typically need some initial capital now to build or to buy that property. And that is the biggest hurdle for most people. The first one is always the most challenging one. And that's why most people don't take their time to explore this option. Once you can buy the first property, if you are focused and if you are disciplined, you can then continue to buy more, by buying the second one. Maybe the income you are making on the first one, if you can save that money, and if you have the goal of using it to buy your second property, then you can have some down payments to buy the second property, and so on. You can buy the third one, the fourth one, and that way you'll be able to build a portfolio of rental property. So that's rental income that you make as a result of maybe properties that you own. What's my recommendation on this? Make sure you buy your property in great locations. And what I mean by great locations is you want to make sure that the crime rate is pretty low. They have good schools in that environment. And if they have good school, you'll be able to attract reliable tenants because many people want to make sure that they send their kids to great schools. And you have to also ensure that you practice good maintenance culture. If there is anything broken in your house, maybe an appliance or any damage to your property at all, make sure you respond to your tenants on time and get it fixed. If you are not the type that can manage people, you should probably consider hiring a property manager to help you. But here's something you must note. If you give out the property to a property manager to manage for you, you are going to have to pay them in order to do that management. And that will further, that's an overhead on you. That's an extra cost, extra expenses on you. And that will surely reduce your profit. But hey, it's going to give you some peace of mind because if there is any issue at all, the tenant will call the property manager and they will not call you. All you need to do is just make the payment. So that's the second one, rental property. The third one, dividend income. This is one of my favorite means of building wealth. This is the income type that you earn as a result of distribution of income or profit from companies to shareholders owning stocks that pay dividend. As a consumer, for example, you buy certain items. Maybe for you, your phone. Maybe if you are the type that like coffee, Starbucks, or a car, for example, as a matter of fact, or food items. If you can now invest in companies that make those things, So when I say coffee, I'm thinking about Starbucks. When I say phone, I'm thinking about Apple. I'm thinking about AT&T or Verizon. If you can invest in these companies, they will pay you dividend. And guess what? You are using their products and you are also making money as a result. I did this personally. I looked at my phone company is AT&T, and I made up my mind that I'm not going to pay any money from my uh, accounts. That's my personal money to AT&T. So what did I do? I started buying shares in AT&T. Today, the dividend that I make from AT&T shares is enough to pay my monthly phone bill. So that's the gist. If you like coffee, go ahead, enjoy your coffee, but don't forget, you should also consider buying Starbucks shares so that as you are consuming your cup of coffee, you are also making money on the side. So, what's my recommendation on this? Before you invest, you got to do your research to ensure that the companies that you are going to be investing your money in, those companies will be around for a very, very long time. If you are not savvy enough to pick stocks, I'm going to recommend that you go into ETFs or mutual funds. And these are just a combination or a basket of different stocks in different companies all looked together. So if one company is having a bad year, the other companies, hopefully, they are thriving. So your portfolio will be more stable than if you are investing in single stocks. So that's the third income source that I want to share, dividend income. The fourth one is the royalty income. This is for the creators, the people that innovate, the people that make things, maybe whether it's a book, a music, or anything at all. So those things are your assets and you license them to other people to use them. So you can continue to earn perpetual income as long as people continue to buy your products. I am an author and I have a book on Amazon right now, more than one book, as a matter of fact. As long as people continue to buy my book, I will continue to make money. Even 10 years from now, 20 years from now, if anyone pick up my book, I am going to get paid. So that's a form of royalty income. The recommendation that I have on this is that you have to ensure your IP, that's intellectual property, is well protected. Don't make sure people don't go out there to copy your asset, your property. So ensure intellectual protection. That's important. The fifth one that I'm going to share is the business income. If you own a business and you provide product or services to your customers, if you can run this business effectively, efficiently, there should be a margin between what it costs you to make your product or provide your service and how much you actually charge your customer. That margin is your profit. The goal is that the cost should be lower, very low, when you compare it to your the price that your customers are going to pay, so that you can remain profitable. So that difference, that profit, the more you can grow your profit, the more profitable your business will become. And the more customers you can serve, the larger the profit can potentially also grow. So run your business effectively and efficiently. That's the message here. What's my recommendation? You need to keep a proper accounting record of your business. You should have a proper structure, whether it is LLC, partnership, or sole proprietorship. There are pros and cons. I encourage you to study them so you know which one will be most suitable for you. Also, you should separate your personal expenses from your business expenses. This gets people into trouble with IRS when they combine everything. Finally, you should be able to draw a salary from the business and still have some profit that you can reinvest in your business so that your business can continue to grow. So that's the fifth one, business income. The sixth one, capital gains income. We all like the idea of buying low and selling high. Is that right? Yes, I like that idea. So when you buy low and sell high, the profit, the difference between the low end and the high end, the selling price is a profit, and they call it the capital gains. Let's say, for example, you are into cryptocurrencies and you bought one Bitcoin when it was around $10,000 a piece. If you held it and sold it when Bitcoin hit $50,000, you have made $40,000 gains as a result of that single transaction. This type of profit is subject to taxation, high tax as a matter of fact, when you sell an asset. And this can be crypto, stocks, or real estate. There are both long-term and short-term capital gains that you have to consider. If you hold an asset and sell it within 1 year, you get that's a short-term gain, short-term capital gain, which is often higher than a long-term capital gain. That's when you own an asset, or when you hold on to an asset for a longer period of time. So what's my recommendation on capital gains income? Capital gains tax can be as high as 37% depending on your tax bracket and how long you held the asset. Long-term capital gains are derived from assets held more than 1 year before they are disposed of. After owning it for less than a year, then you pay short-term capital gains. So again, you have to know what works best for you, and you have to know the tax implication of your action, whether you sell within 1 year or you hold on to that asset for longer than a year. So that's what you need to watch out for. Number 7, the last but not the least, digital income. This is another excellent way to earn income. The money you make by creating an online course, ebook, podcast, TikTok video, YouTube, Instagram, blog websites, or membership sites, these all fall under the category of digital income. This is an excellent source of evergreen income because once you have it set up and you can keep it running such that it continues to attract different people, you'll be able to continue to make money as long as people continue to use your service or buy your products. The recommendation that I have here is that you should continue to find ways to increase your reach, grow your followership, grow your tribe, grow the number of people that continue to enjoy and find benefits in your products or services. And that's where I'm going to wrap it today. I shared 7 different types of income with you. The first one that I talked about was earned income. That's income you make as an employee. And I talk about rental income, income you get from owning rental properties. I talked about Dividend income, income that you get from owning shares in companies that pays dividend. I talked about royalty income, income you make maybe uh, from owning or writing a book. That's royalty income. Number five, business income, income that you make on your business. Number six, gain income, income you made by buying low and selling high. Number seven, digital income, that's income you make online, e-commerce. If you currently have just one source of income, do yourself a favor and explore the possibility of adding another income source. If you have two already, step it up and add one more. The deal about money is we must find ways to make our money work for us. And that's the way to achieve financial freedom. Thank you for listening today. Till next time again, keep winning, my friends. Keep winning. And if you haven't already done so, please click the subscribe button so that whenever I roll out any new podcast episode, you will know about it. Thank you.
This episode of Winner's Ways podcast has come to a close. We hope you enjoy and learn something from today's show. We want you to win and excel in all areas of your life, and we regularly explore and share information with our listeners to empower them to win. Be sure to subscribe to our podcast for more tips and strategies to help you find the success that you've always dreamt of. And don't forget to rate and review so that we can continue to bring you more podcast episodes to empower you. We will love to have you again next week. Now, keep winning.